Let's get back to the markets. Then PNB Housing Finance, that's the company, in fact, that's the housing finance company on our radar. If we take a look at it, in this month itself, the stock is up by more than 20%. Year to date, it's gained more than 30%. So that clearly has been a big mover. Let's get the year-to-date chart up for you on the screen. You'll see that it's up close to around 32%. And this month itself, it's up a good 20%. But to discuss more on that, we have Mr. Gupta, the MD of PNB Housing Finance, who joins us. Hi, Mr. Gupta. Thanks so much for joining in. First things first, sir, can you size up the impact of demonetization on your third quarter numbers?
The demands were lower than the previous quarter by about 13–14%. But the portfolio quality stood firmly, and I think that was a bigger sort of a concern for all of us, will the quality of the portfolio, delinquency levels or NPA levels will surge, but they have settled down very well from January onwards, and I think in the month of February we should be at the levels of pre-demonetization period.
Okay. Good afternoon, Mr. Gupta, and thanks so much for joining in. There is hardly any credit demand for capex or infrastructure or from large corporate houses. So clearly all the big banks are turning to retail. Is that space seeing intense competition, and therefore can it squeeze your margins?
Yes, certainly. The credit growth in the first 6 months has been slower than anticipated, and hence all the large lenders have sort of honed their skills onto the retail segment. And there is, a price war, I would say, undercutting on the rates of interest and the fee element of loans. But not to worry, specialized housing finance companies certainly hold a stronger footing when it comes to acquiring customers and delivering a far superior quality of service. So I don't think that only costing or pricing is going to make a differentiator in the competitive edge of specialized housing finance companies.
All right, Mr. Gupta, how were your quarter three margins and your spreads? How will they pan out in the fourth quarter?
So the way we look at it is two elements. So most of you only report net interest margins, which for us were also positive of about 3%, and we will continue to protect that. The other important and a more significant element is the spread, which is the pure sort of interplay or the margin between cost of funds and the yields that we are getting on our portfolio. That we always sort of target to be in the vicinity of 200 to 208 basis points, and that is also protected. So I think it's a clueful business demonstration which actually determines the spreads and the NIMs.
Okay, so you target spreads at 200 to 208 basis points, and you will look to protect it. So let me come to your asset quality. Your gross NPAs rose from 0.26 to 0.37% in Q3. Will the gross NPAs get worse before they get any better?
Okay, so now one is it is not going to get worse. The other thing is that if you were to compare quarter 3 of 2016 with quarter 3 of 2017, the surge was only 2 basis points. It moved up from 0.35% on 31st December 2015 to 0.3% on 31st December 2016. So there wasn't any significant sort of growth or surge in gross NPAs. And typically speaking, in quarter 3, what happens is that we let a forward flow happen so that we can cure our portfolio through the SARFAESI Act. So generally speaking, all the lending institutions, they show a higher NPA at quarter 3 end than what happens in quarter 4 end. And I expect the same trend to follow even this year.
All right, so then, if we just move on, then I want to ask you a couple of other queries in terms of what they're doing. How much is your LAP book, loan against property book? I was trying to understand, and did it show any more stress?
Well, we have a loan against property portfolio, about 18% of our total portfolio. And as I keep saying, that's an unregulated product. So the canvas gets painted by the architects or the management of each institution differently. you will be surprised to note that our gross NPAs on LAP portfolio are lower than our NPA on housing loan portfolio, and our overall NPAs are one of the lowest in the market. So it all depends how you manage your portfolios.
Okay, so that's good to know. So now that housing has got infrastructure status, how has life changed for you? Has money gotten cheaper?
What has happened is that the affordable housing will get notified as an infrastructure sector, and the credit flow into infrastructure is far easier than otherwise. Well, lending institutions like us have been getting debt from the capital markets pretty easily. I think with the infrastructure status for affordable housing, the smaller players or the smaller housing finance companies will certainly have ease of raising debt at reasonable cost for a long period of time, and that is where it will really impact positively. And I think that will also help these housing finance companies, which are far smaller, to bring down their lending rates in the future.
All right, thanks so much, Mr. Gupta, for joining in and giving us all those details with regard to PNB Housing Finance.